finished analyzing a company's fundamentals, technical analysis can help you improve the timing of your buys and sells so that you can better manage risk. Technical analysis uses patterns, also called bases, as signals for when stocks are setting up for gains, even a potential big run. Patterns also signal when a stock has topped, meaning it's not likely to go higher. With one click of a button, MarketSmith's pattern recognition identifies these patterns for you. Pattern recognition spotlights any of 7 existing or emerging base patterns on the daily and weekly stock charts. They are called a cup, cup with handle, saucer, saucer with handle, double bottom, flat base, ascending base, consolidation, and IPO base. Pattern recognition also gives you the technical data associated with a base, including the stage count, pivot, length, and depth. Stages begin at 1 and increase with each subsequent base formed. Stocks emerging from later stage bases, like 3rd or 4th stages, are further along in the stock's entire move and may be more prone to failure or less stellar highs. The pivot corresponds to the stock's previous area of resistance. In a cup with handle, the pivot is the peak price of the handle. For a double bottom, the pivot is the top of the middle peak of the W shape. When a stock breaks out, it may be poised to move higher. Once a pivot point is determined, the percent to pivot maintains the percentage difference between the stock's current price and the pivot point, in addition to the number of days or weeks since the pivot was achieved. Stocks advancing in price 20% or more within 3 weeks of the pivot point are marked with the Power from Pivot flag. This type of powerful action following the breakout from a well-formed base may indicate that further strength can be reasonably expected. Under this circumstance, investment legend William J. O'Neill encourages investors to consider holding the stock for at least 8 weeks from the pivot to fully capitalize on a stock that could be a big winner. Pattern recognition also gives you a clear indication when a stock reaches a new 52-week high during the building of a base or during a breakout day or week. The RS line becomes highlighted with a blue circle. You will also see color-coded zones that suggest optimal times to take action. The profit, pivot, and loss ranges, green, blue, and pink, are calculated from the pivot point for the most recent base. The pivot range, highlighted in blue, is 0 to 5% above the pivot point. Generally, this is a good area for you to make an initial purchase of the stock if there's a large amount of volume. The profit target range, highlighted in green, is 20 to 25% above the pivot point. When a stock is purchased at the original breakout, this is a range to consider taking an initial profit. That way, you lock in some of the stock's gains before it possibly dips down again. The loss range, highlighted in pink, is 5 to 8% below the pivot point. At this price range, you may want to cut a losing position so that you can apply that capital towards a stock that's going up. If you also subscribe to Growth 250, your pattern recognition subscription will offer you additional reports in the list panel, breaking out today, recent breakouts, near pivot, tight areas, and power from pivot. The near pivot list displays every Growth 250 idea that is actionable, that is within 5% of its proper buying range. To go deeper on any research topic, visit our Learn page. You'll find videos that cover specific tools and features, as well as our extensive webinar archive. For personalized help on any aspect of the platform, don't hesitate to call a product coach or write to us. Our goal at MarketSmith is to be the best stock research platform available, so you can build your stock expertise and make more money in the market.